Welcome everyone. Today we are moving one step ahead in understanding the financial health of our business. So far we have learned about the income statement, which tells us how much profit or loss a company makes over a period, and we also covered the balance sheet, which shows what the company owns and owes at a specific point in time. But today's question is, does profit always mean cash in hand? The answer is no. And that's exactly we need our third key financial statement, cash flow statement. The income statement tells us about profit, but it doesn't show us real cash. So a company might be profitable but still have no cash in hand due to accrual basis of accounting, and that's where the cash flow statement helps. It shows the actual cash inflows and outflows and gives us a clear picture of liquidity. I think you know what is liquidity is. It is actually how much cash a company really has to pay its bills or investments. So this statement shows us the real cash movement, where cash comes from and where it goes. Now you would have a bit idea that this statement is very important because cash is the lifeblood of any business. Even if a company is profitable on paper, it can shut down if it runs out of cash. So this statement is very important for not only day-to-day decisions, but also it helps banks or investors decide whether to support a business or not. Now let's break down the cash flow statement into three main parts or sections, just like a story that shows where the money goes. So the first part is operating activities. This is the heart of a business. It shows how much cash the company generates from its regular operations. For example, cash received from customers or cash paid for salaries, rent, and inventory. If this section shows a positive number, it usually means the business is running very well. And the second part is investing activities. As the name suggests, this section shows where the company is investing its money for long-term growth, like buying machinery, vehicles, or even selling off old equipment. So it's about cash spent or earned from the assets. Now finally, we have financing activities. These activities tell us about how the business is being funded, either through borrowing, repaying loans, or issuing shares to raise money, or paying dividends to shareholders. So together, these three sections help us understand not just how much cash a company has, but how it got that cash and how it is using it. Here's a simple example to understand cash flow statement. ABC Stores got 800,000 from customers and paid 500,000 in expenses. So operating cash is $300,000. They bought equipment for $100,000, so it would be investing activity, and got a 200,000 loan but paid back 50,000. So net 150,000 is from financing activities. So the total cash increase you are watching here is 350,000, and the end of the year cash in hand would be $450,000. So that is going to be the closing cash balance that will go in the balance sheet. Now let's have a comparison of income statement and cash flow statement to understand the big difference. The income statement includes all earned income, even if it is not received, and it includes non-cash expenses like depreciation and other non-cash expenses. But the cash flow statement only deals with the real cash that comes in or went out. Now it's your turn. Let's review what we have learned. I will read out each transaction and you have to tell me which type of activity it is. O for operating, I for investing, or F for financing. Are you ready? The first one is salaries paid. Yes, that's operating. Bought a new delivery van. It is investing activity. Took a loan from the bank. Yes, it's a financing activity. Received cash from the customer. It's an operating activity. Paid interest on the loan. It's also an operating activity. It can be financing depending upon the accounting treatment. Owner invested capital. Yes, it is an investing activity. Last, paid electricity bill. Yes, it is an operating activity. So that's all about cash flow statement. Let's keep learning, but don't forget to subscribe to Concepture Academy and also follow us on Instagram and Facebook. And please also leave a comment and tell us what you want to learn next.